G'day everybody, and welcome to the executive summary for the 21st of January 2015. We're going into obviously a very important and critical day for the S&P and the markets worldwide tomorrow as the ECB speaks on where we go from here in terms of monetary policy. Now, we also comes at a critical time in terms of where we're at on levels of the S&P and other key indexes. So let's start with that. Now, we've talked about the importance of open range, and on Friday, options expiration, we set a range of a high of 2020.39 and a low of 1988.12. Now, we closed above that on Tuesday, January 20th, and have continued above that today, Wednesday, January 21st. So, as we squeeze into this little triangle here, which you can see as I highlight that, and that trend line, we're right at that little point. Now we've had 1, 2, 3 tests on the top, as it is now, and 1, 2, 3 tests on the bottom. So a break is about to happen. Now open range suggests that we should go higher. The money flow has climbed higher, yet it hasn't quite outdone the recent high back here on January 8th. So it's not a confident break, but the money flow is still positive, and we're obviously squeezing into that little pinch. Now what happens tomorrow at 5:30 Pacific time will obviously set the tone for the market, and if we do start breaking down below this trend line here, and then also more importantly this 1988 Fibonacci retracement, this could mean a significant down move in the market. If we break higher, I expect that we'll push at least up into these levels of around 2065 or maybe as high as this high of 2089. So it's going to be important to see how the market reacts to the comments in the morning, and that's why I wanted to prepare a couple of options both on the long side and the short side. So just before we do that, the other thing I'll point out is also the Dow Jones Global Index, which is DJWO. If we look at the way the overseas market has actually shaped up, you'll actually see that the Dow Jones Global has led the breakout ahead of the US markets, and actually today has already broken the trend line. So in terms of what the world is thinking as is reflected in the technicals, we're going to go higher. So let's start with the longs. Firstly, CSTM. Bit of a kind of a random stock here. I've never come across it before, but this has been consolidating and moving up quite nicely over this last couple of months. You can see the Twigs money flow has been positively moving without much positive movement in price, which suggests accumulation. So with these higher highs, we could be set for a little bit of a pop. Now we closed at 1824 here today, and the next resistance isn't until 1998. So there could be a nice little $1.50 grab up from 1824 to this kind of 1970 range, and that could be a nice in and out scalp trade for a 7-8%. So I like what's happening on the Twigs here, and obviously you can see this nice little shape of the consolidation reminiscent of a fallen angels trade. So that's first on the long side. The other one's a bit more of again, a kind of a fallen angel, Sprint. This one's obviously really had a rough time. Now, there's a lot of speculation as to whether they're going to be able to recover and how cheap is cheap for Sprint, but they have started to see some positive movement on the money flow. Again, you can see the accumulation happening here, reaching some highs that we haven't seen since it was back here at $6. So between the 50-day moving average and the overhead resistance here at 528, there's obviously about an 80-cent potential move before we run into that overhead moving average base resistance. And you'll see as well that that's going to be where we come into contact with the resistance set back here in December 1st. So from being on the conservative side, I'd be looking for a pop up into that 513, 512 range if we see some bullish action in the market. In terms of an entry point, obviously we had a big move today up 5.53%. I'd be looking to snag it kind of around that 425 area. Okay, moving on. We look at CNX. Now, a lot of people have been asking me about oil. Now, there's still potential for oil to go further yet to the downside, and so we're kind of looking at the where that bottom might be, and waiting for the kind of the strength to come in more full force before we get overly zealous. But if we do have a look at some of the ones that have been shaping up, Consol Energy has been forming a base, and so that's one's started to move. As well, the other one on my watch list is PER, Sandridge Permian Trust. You can see that one started to break. So those are the two that I'll be watching tomorrow if we see further strength in energy, as both of those have that kind of nice rounded base. Although it is important to be wary that often the oil prices and stocks like this can be manipulated on days of low volume, such as we saw today. Okay, so now on to the short side of the market, DGI. So this is something that has printed a nice little rounded top here and has been dropping away, as you can see, down to this 28 price. 27.69 is where we closed today. If we have a look at where the Fibonacci retracement levels are on this stock, you'll see that we've just broken down nicely underneath the 50% at 27.82. So anything around that area, I think, is a good short candidate down to the 77% fib at 25.68. Which offers about a $2 drop, or again, that kind of magic 8% number. PLNR is the next one. And if we look to that stock, you'll also see a very similar kind of trend. This long, exacerbated type of sideways movement that's just starting to come to looks like to a head. So if we see a break then below this support of what are we looking at here? The low of 653. So if we see a break of 647, we could see a nice drop on this to fill the gap to the downside down here into this, possibly as low as this $4 range. We're looking at about 413 here. So if the market starts to weigh in on the short side, you can see the money flow certainly suggesting that on this stock, and there's a good range on this one. Obviously, it has to clear this level here at 6, but even to 6, there's a bit of room for movement. And the final one on the short side is Ringcentral Rng, and this one seems to have already broken its trend line, so it's a little bit of a chase. But any kind of rally up into this area of 14.16, 14.26, this is something I'm looking at, and you can see that the money flow has dropped off very sharply. And if we look at the Fibonacci's on this one as well, you'll see that we're got that potential again to rally up into this area. 1387 and below is where that Fibonacci sits. And if we look at a drop down to where this kind of secondary part of the rally stemmed from, it's quite close to that Fibonacci that we spot here at the 77% level. So all of these have some significant profit potential, and these are going to be the ones I'm looking for trading opportunities tomorrow. So I certainly hope that helps. Remember, the key thing is not to chase, to wait for a stock to rally into resistance. And if you're trying to play a lot of stocks, like if you're looking at 4 longs and 4 shorts, remember you can always put the stocks in OCO groups so that if one of the shorts triggers, it cancels the other ones out. So you don't end up with 4 positions. You just end up with whichever the first 1 or 2 are that hit your entry targets for the long or short side. Well, that's all we have for you tonight. I hope that helps, and we'll see you in the next executive summary.